Hey everybody, Jason Rivera here, episode number 2 in this vlog or podcast, as of now titled Car Line, Value Investing in the Car, Value Investing in the Car Line. We're still working on the name. Again, if you want to help us name it, let me know in the comments. But I'm in the car line waiting to pick up my oldest daughter from her charter school right now. And I wanted to answer in video number 2, or in video number 1, I talked about I answered the question why does value investing work anywhere in the world. And yes, in general, if you didn't watch that video, in general, yes, it should work everywhere. There's a huge caveat where it doesn't, but in general, yes, it works everywhere in the world. But I didn't answer the question when it works best, which is what we're finding out now. Actually, probably for the better part of the last 5-6 years, value investing has underperformed growth investing because value investing works best in either a flat or declining market or recession or depression, that kind of thing. It doesn't work best when the market is going up, and it's been going straight up for, again, 6, 7, 8 years now. I don't even know where we're at now, how many years we're at now. But value investing works best when the stock market, there's some kind of recession, there's some kind of major uncertainty, and long-term uncertainty is best. A couple years ago, people were freaking out about Brexit, and the stock market dropped a lot, and then it went back up. Years before that, it was Greece leaving the European Union, which caused a lot of issues, short-term issues in the stock market. So I think sometime in between, if I remember correctly, Brazil was having some major issues with their economy, corruption, stuff like that, that caused short-term issues. But again, the stock market just kept on going straight up, and it has been going straight up for 7-8 years or whatever it's been now. And value investing in general has underperformed, at least in terms when you're comparing it to growth investing. It still is possible to outperform when value investing in a growing stock market, but it's infinitely harder to do. For example, I haven't bought a stock or a business on the public stock market in, I believe April 2015. So coming up on 2.5 years now, almost exactly 2.5 years is the last time I bought a stock for myself and the portfolios I manage. Why? Because I can't find anything worldwide that is undervalued and fits my specific criteria of what I require from an investment. Everything I find is either massively overvalued, fairly valued, or it's crap, and I wouldn't invest in it no matter what. Even if it was an end cap situation, the companies at that level are just so bad and they're burning so much cash, I wouldn't even invest in them if they were a Benjamin Graham type end cap stock. So what is a value investor to do in this kind of situation? I've been taking a lot of time off investing or researching companies to grow my other businesses, build better foundations of my businesses, learning a lot, consulting, teaching, pretty much anything other than actually evaluating individual businesses, other than when I'm teaching and going through case studies, which we're doing on the blog right now, and I'm doing with one of my $10,000 coaching clients. I'm doing anything other than evaluating businesses. Again, why? Because I got to the point, I'm a very concentrated investor. I would be perfectly happy owning fewer than 8 companies in my entire portfolio. And I have very strict criteria of what I require from an investment and it's been working. My process has been working. Obviously, if I've been beaten Buffett over the first 5 years of my career, now coming up on 6 years, compared to the first 5 and 6 years of his career, it's working. So I don't want to go against the process. And my watch list, I think right now, if I remember correctly, I own in the portfolios I manage 12 companies, which is a little bit high for me, but at the time I was finding good companies to invest in. So why did I stop looking at companies pretty much altogether for the last, not 2.5 years, probably 1.5 years? Because my watch list, where I keep companies that I'm interested in purchasing at some point, whether it's due to valuation or management or whatever the issue is with the company at that time. Most of the time it's valuation, which I think pretty much 99% of the time it's valuation. But my watch list, if I remember correctly, and I looked at it the other day with my coaching client, is now, or it was when I stopped looking at people, between 50 and 80 companies. Again, I would be perfectly happy owning fewer than 8 companies total in the portfolios I manage, and I never sell unless the economics of the company change. Management starts doing terrible stuff after I buy them. Another greater opportunity comes up, or I think there's another one, another situation where I sell, but the main one is the economics of the company change, or I make a mistake. That's the other one. Or I make a mistake in my analysis and I realize it afterwards due to some new information that came out. Those are the only times I sell. So I haven't been selling anything in my portfolios or the portfolios I manage because they keep going higher, and I'm only in great companies at this point. There are a couple NCAF companies I'm considering selling, but they are still what I consider undervalued compared to what they should be worth. So I'm considering selling those. But the other companies I own, they're great companies. I could potentially own forever, again, as long as one of those other things don't happen. My management starts doing stupid stuff. They start burning a ton of cash, stuff like that. So I'm not going to sell anything right now. And I don't think I've sold anything in about that same time period too, 1.5 years, 2 years, something like that, along those lines. So again, that value investing, to go back to my original point, value investing works best in a down market. So I've been spending my time elsewhere other than evaluating companies. So why have I been doing that? Because I want to keep myself out of looking at companies every single day like I used to, because I will just get frustrated and I might get emotional at some point and might want to purchase something just to purchase something because I haven't bought anything in a while. So I'm purposely keeping myself out of that mindset, emotional mindset, and focusing my attention and energy elsewhere. Reason number 2 that I'm doing that and getting away from looking at companies pretty much all together for the last 2 years, 1.5 years, 2 years, is I'm building my other businesses and working to build my other businesses better, more efficient, bring in more clients, more cash flow, more revenue. Building my team is what I'm doing. I now have 4 part-time employees or virtual assistants that I'm training and getting integrated in all my businesses, delegating tasks, all that kind of stuff. Why? Again, why? The question goes back to why. I'm doing all of this so that when the market does crash, and it's going to crash at some point, I don't know when. I've stopped predicting that. I said 5 years ago the market was overvalued and it's going to crash sometime soon, and it's gone straight up since then. So I don't know when it's going to crash, but it's going to be sooner rather than later, because I believe we're at 8 or 9 years now in the bull market, and bull markets typically there's a crash every, I believe, 5 to 7 years. So we're more than due. Valuations are sky high worldwide on pretty much every asset. Stocks worldwide, real estate worldwide is going higher and higher. Valuations, bond prices are high. I read the other day, I think it was a week or 2 ago, I read something that valuations are high across the board, across the entire world, the highest they've been since 1900, which obviously scares someone like me, who is a value investor who hates high valuations, wants to buy undervalued assets. So what I'm doing, I'm preparing not only myself by learning and growing as an individual, I'm building my team, building my businesses, doing anything other than evaluating individual stocks and individual companies, so that when the crash happens, me and my team and my companies are ready to buy assets on the cheap. That's what I'm doing. That's what I've been working towards, on top of teaching and building courses and all the other stuff I've been doing. That is the main focus. Everything is focused on being prepared and being ready for when the market crashes to buy assets, whether it be apartment buildings, down the line, stocks in public companies, eventually entire smaller public companies, other businesses, whatever it may be. I'm looking to be ready and have enough capital on hand so that I'm ready, my team's ready, all my processes are ready, all my businesses are producing enough cash flow so we can buy other assets on the cheap when the market crashes. Again, I don't know when that's going to happen, but it's most likely going to happen sooner rather than later. So that's when value investing works best, is in a recession or long-term recession, long-term economic pain, because value investing, again, it's all about finding value, finding margin of safety, finding undervalued assets, purchasing them, hopefully if they're either massively undervalued at a massive discount, or finding reasonable to great discounts at great operating businesses and then holding them for the cash flow over the long term. Again, so that's what I'm doing. That's when value investing works best, and that's why I haven't been recommending anything. Almost at least once a week I get an email from either a past Press on Research subscriber or somebody else in the value investing community. I noticed you haven't recommended a stock or bought a stock in a while, and you're right, because I can't find anything of value. So I've been doing other stuff, building other businesses, and like I talked about it earlier. But I've got to go for now. I'm getting ready to pick up my daughter. She's getting ready to come out of school. So I will talk to you soon. I hope this helped. And again, if you want to help name this, what will become an ongoing series, let me know in the comments below, or subscribe. I'd love to hear your thoughts about this, because I know I'm in the minority when it comes to this kind of stuff. I still know value investors who are not necessarily, this was a couple years ago, they were still buying stuff on a monthly basis. I don't know if they are still buying stuff on a monthly basis, but I still see value investors who are finding value out there, or what they perceive as value at least, and I just can't find any. Worldwide, again, I think I said this in the last video, I've got 23 countries represented on my watch list, and I think that covers 50 to 80 companies, and I will invest anywhere in the world, and I can't find value anywhere in the entire world right now. So again, if you are, let me know. I'd love to learn where you're finding value, and I'd love to take a look. I'm sure you won't share that, because I know I probably wouldn't, unless it's just a general country type thing. So I would have no problem sharing that, because that's general knowledge. But as always, subscribe, like, share if you found any of this value. And again, if you want to help name this, let me know the name in the comments below. I'll talk to you soon. Thanks. Bye.